You may have come across the phrase generational wealth and might have said to yourself, wow, that sounds interesting and important. On the other hand, you may have forgotten about the idea because you are too stuck in other chores. Having generational wealth can help you from crippling in your retirement years in many ways. Are you thinking how? Let's understand the concept and dive deeper to the answer of your question. You may have set your sights on paying off your debt, increasing your savings, or achieving one of your other financial targets. While you are focusing on your current financial situation, it is possible that building money that you will be passing down through generations is not your main priority. Having said that, you could still incorporate it into your plans for the long-term achievement of your investment goals. Not quite clear what exactly is meant by the phrase transitioning generational wealth? Don't be concerned. I will explain in detail what it is and show you how to constitute one of your own family. So be sure to subscribe to this channel for almost daily videos that might result in your wealthy and successful future. Let's begin. Number 1. Write a will. Even if you lack an advance directive, you still need to make a will, since it's crucial to take care of your loved ones after you pass away. Your precise desire ought to be included in the will. It is to your advantage to be as detailed as possible regarding the plans that you might have for any assets that you have earned. It is not unusual for things to become contentious among the living members of your family in the absence of a will. Since they have already experienced your loss, the emotions will naturally run high. Including specific directives in your will help you avoid a lot of unpleasantness, as well as financial stress for your loved ones. Number 2. Buy land. It is likely not going to come as a surprise to you to learn that investing in real estate is still considered to be an excellent method for increasing your net worth and maintaining it for the benefit of your family members. Real estate assets, as the majority of us are aware, have a good chance of increasing in value over the course of time, and the revenue generated by renting those properties may guarantee a consistent flow of cash. To begin, draw an income through real estate. However, you do not require a sizable investment portfolio. Even something as straightforward as letting a space in your house might be profitable for you. Another option available for you is to band together with other capitalists to purchase a property that can be subdivided into many units and rented via hospitality marketplace such as Airbnb. It is essential to keep in mind that the rental exchange might be a complicated process. Nevertheless, it is a very savvy investment approach that also be utilized as a tool for tax preparation and investment management. Number 3. Create multiple streams of income. Having many sources of income can make it simpler to have a legacy of riches to future generations. In point of fact, the typical millionaire benefits from 7 distinct sources of income. There are many different ways to make money, but one of the most effective is referred to as a passive income. Active income is any form of income that requires exchange of time for monetary compensation, like a job or a sideline job. Earning money from your property after the initial investment and without putting in much more effort is an example of passive earning. For example, rental homes, revenues from publications, peer-to-peer financing, and other such activities. Therefore, you will need to invest the time up front, but after the initial basis is established, you will try to accumulate from your efforts and they will continue to pay off. You may, for example, publish a book and sell it years later to maintain earning money from the profit. Alternatively, you might buy a property to rent out now and generate income from the rental. Begin establishing passive streams of income immediately to create wealth for future generations. Number 4. Build a family business. Family businesses have a greater chance of succeeding than other type of enterprises since more than 30% of them are passed down to subsequent generations. Imagine being in a position to give your children the reins of a thriving family that you have built from the ground up. It's feasible that your family firm could survive into the second generation, despite the fact that this isn't the case of all family enterprises. If your skill and passion are compatible with those of your children, there's a good chance that you may one day wish to inherit the business that you have built for them. You must begin including your children in the family business at the earliest as possible if you want to increase the likelihood of smooth handover. They should have an understanding of how the business functions in order to continue in this line of work. If they have no interest in the company that you have developed, oh boy, you shouldn't expect them to take take it over when you retire or pass it on to them. In the event that they are unable to take care of the business, you may examine the company being sold in order to find significant wealth in other ways. Number 5. Create a trust. The establishment of a trust is among the most common and widely used strategies utilized in estate planning for the purpose of protecting assets. A trust, also known as trustee agreement, is typically part of an individual estate investment and is used to hold assets and resources for the beneficiaries. Having a trust will enable you to have an ability to determine which of your assets should go to which of your beneficiaries. You also have the option of relaxing certain requirements in order to guarantee that your money will be preserved and passed down in a manner that is congruent with your vision for the generational transfer of wealth. Number 6. Cryptocurrencies. As a result of surge in popularity of cryptocurrency, there are already a significant number of people who are millionaires. As an increase of number of individuals become aware of the opportunities presented by Bitcoin, I have no doubt that they will continue to observe this trend. Eric Finneman holds the record of the youngest person to ever earn $1 million through Bitcoin. Eric is the best known for turning $1,000 present from his grandparents into Bitcoin rather than spending any of the money on anything else. This lends even more credence to the idea that younger generation would invest the money they inherit from their parents and grandparents in cryptocurrencies. This transfer of wealth from one generation to the next indicates a great deal more than simply the death of an older generation. It signifies a change in views, values, and the balance of power. On the stage of the world, this is being acted out in a wide range of ways. Whether this takes the shape of demonstrations, the mobilization of large groups via social media networking sites, or the rapid growth of Bitcoin, a good number of the moves that we watch play out takes place over the course of several months, and in some cases an entire year or larger. Cryptocurrency is one of a kind due to the fact that its very existence is challenged to the dominantal model of the financial system. It is a non-violent process against the authority that has been going on the greatest. Number 7. Invest in your children. A college degree will open up more doors to jobs that pay well for your children and provide them open options overall. You will be providing your child with a head start in terms of their financial future if you're able to pave the way for them to attend college without having to take out any student loans. When faced with a low starting salary, the rising and living expenses, a large number of recent college graduates find it difficult to make the money payments on their student loans. This can easily lead to the further debt, which will postpone the process of constructing a strong foundation of your own, which they will need to do eventually. Given that so many students continue their education by enrolling in master's degree courses immediately after completing their undergraduate degrees, the overall sum of student debt could be quite simply devastating. If you want to put money away for your children's education, you should investigate several ways to put money away on a consistent basis in a setting where it can develop. A good illustration of this is the widespread availability of the tax advantage education saving options known as the 529 plan among banking institutions. You can also protect investments in cash by putting them in a trust, which will have the monies paid to beneficiaries at the same point in the future, perhaps when your children start attending college. Number 8. Life insurance. Investing in a life insurance policy is yet another smart move you can do, which will ensure the financial well-being of your loved ones after your passing. In the event that you pass away unexpectedly, a life insurance policy will give you a down payment that will extend from the taxation of your family members. If you take these precautions to safeguard your loved ones, they won't have to deal with the added stress of having cope with the unanticipated death of one of their own after they have already come to terms with the fact that you're no longer there. Life insurance not only safeguards the financial well-being of your loved ones in the event of you passing away unexpectedly, but also has the potential to bestow significant advantages on you while you are still alive unless you buy policies add-ons, which offer protection against specific risk. In the event that you become disabled or require extended medical care due to an illness, for instance, you could get additional coverage known as supplements. And finally, number 9, stock market. One of the most effective strategies for passing on wealth to future generation is to begin making investment in the stock market at the earliest age possible, with the assumption that you will sit back and watch those investments compound and grow over the course of the decade. According to what is mentioned in The Way of the Wealth, one of the most significant flaws that humanity possesses is their inability to comprehend how the logarithmic system works. It is the best time to start laying the groundwork for the wealth, which can be passed down to subsequent generations to buy shares in a low-cost investment account that follows the S&P 500 or the cumulative stock market, and then keep the cash in that pool to grow rapidly. This will allow the wealth to be passed down to the future generations. Thank you for watching. Don't forget to subscribe to this channel for a better future, and also make sure to hit the like button. See you in the next one.